Hey team, happy October. Let's have an amazing month. Let's execute on patience. Let's execute on perfection. Okay, so anyways, as mentioned, a lot of cool announcements coming up. If you haven't noticed, I got sick. I sound really nasally because I got the cold. Doesn't matter, I'll do my best. Crude oil analysis, that's our first analysis. Open the charts. On the monthly time frame, as usual, we identified our monthly upper, our monthly lower zone. So let's talk flow. We see sellers had control, strong push to the downside. We see buy sensitivity enter the market at our lower monthly zone as expected. What's after a push to the downside? An exhaustion to the upside, where now we're seeing what is likely a higher time frame continuational push to eventually retest our monthly lower zone. So now let's take it to the weekly time frame for a closer look. All right, down to the weekly, we identified our weekly upper and our weekly lower zone. Now when we look at price action, we see that strong push to the downside. Price found buy sensitivity at our weekly lower zone. We have an exhaustion. What are we seeing at completion of exhaustion? We're seeing sell confirmation. Okay, sell sensitivity is re-entering the market, and we can see that even on the monthly with the strong pin bar. Okay, so we do know that there's sell pressure in the market. We do know that price on the higher time frame is likely going to retest its monthly lower zone, so we're only looking for entries to the downside. We want to swim with the current. We do not want to swim against the current. Okay, it's much harder to do so. All right, down to the daily for a closer look. We're looking for an entry to the downside. All right, down to the daily, we identified our daily mid-range zone. Again, horizontal buy sensitivity. So let's make sense of this, because if we make sense of this and simplify it, it's a very, very simple trade. All right, so let's take it back to the monthly actually. All right, what do we see here? Again, likely a monthly continuational push to the downside. So this is sell bias on the monthly time frame. What do we see on the weekly? We see a weekly push exhaustion with sell bias to the downside, because what's after a push and exhaustion? That's right, a continuational push to the downside, and we have confirmation that a continuational push to the downside will likely happen, because we do see again sell pressure to the downside, so strong sell sensitivity. So we see monthly sell pressure or sell bias, we see weekly sell pressure, sell bias. So when we take it down to the daily, doesn't it make sense that if price is able to break its last area of buy sensitivity to the downside, that we have a high probability entry short to at least our weekly lower zone? Yes, that's correct. So in simplicity, when we see a break to the downside, we're waiting for exhaustion, price action confirmation short, and we have a high probability entry short to our weekly lower zone. So when we take it down to the 4-hour time frame, this is when we start to talk about entry. Okay, again, patience, because price might not break to the downside right away. We may see an impulse move to the upside, but when price does break this daily mid-range zone to the downside, that'll be considered a push, because this is an area of buy sensitivity. What's after a push to the downside? That's right, an exhaustion to the upside, where then we're waiting for a bearish engulfing candle close, which is price action confirmation, and then we're going short to our weekly lower zone where TP2 is located. Once price reaches TP1, we move SL to entry and we play with house money. Now there's only one scenario that would make this trade invalid. Very simple. If price fails to break to the downside and instead it stays above and plays above its daily mid-range zone, well, this trade becomes invalid, because we know that there's not enough continuational sell pressure for our move to the downside. All right, so that's it for crude oil, and on to the next one.